Hey everyone, welcome back to Corporate Decoder, the place where we decode the real story behind every company's filings. Today we're diving into Cabot Corporation's latest report, and let's just say it's not all sunshine and rainbows, but there are definitely some interesting numbers to unpack. This is an 8K filing, which typically means there's been some significant news that the company needs to report to investors right away. Think of it as a company's way of saying, hey, something important just happened, and you need to know. The important date here is August 4, 2025. That's the day the company is telling us about something that's already happened. The company we're looking at today is Cabot Corporation. They're involved in the chemical industry, making specialty chemicals and performance materials. You might have heard of them for things like carbon black, which is used in tires and plastics, or fumed silica. Cabot's stock trades on the New York Stock Exchange under the ticker symbol CBT. That's how you'd find their stock price if you wanted to follow along. Now, the meat of this report is in item 2.02, which is all about their results and financial health. This means they're telling us how they did financially. The big news Cabot is sharing is from a press release they put out on August 4th. This press release talks about how they performed in the quarter that ended on June 30th. So essentially, they're giving us an update on their business performance for April, May, and June of 2025. The actual press release announcing these results is attached as Exhibit 99.1. These press releases are often the first place companies share their quarterly earnings, and they usually contain the key financial numbers that investors will be looking at. So in this filing, Cabot is effectively telling the world about their latest financial snapshot. While this document itself is more of a notification that this information is available, the underlying press release is where we'd find the juicy details about their performance. Since the filing mainly points to the press release for the actual financial results, we'll focus on what that announcement likely contained. Companies usually put their most important financial figures in these releases, like revenue, earnings per share, and guidance for the future. It's their way of communicating directly with shareholders about how the business is doing. Now, if we were to look at typical earnings releases for a company like Cabot, we'd expect to see how their different business segments performed. For example, how did the performance chemicals segment do? And how about the specialty carbon segment? Were their sales up or down? Did they make more or less money than in previous periods? These are the kinds of questions an investor would be asking when they see a report like this. They want to know if the company is growing, if it's making a profit, and if it's a good investment. Let's think about what these numbers might have shown. For a specialty chemicals company, a lot depends on the global economy. If industries that use their products like automotive or construction are doing well, Cabot is likely to see better results. On the other hand, if those industries are slowing down, Cabot could face challenges. It's a bit like a domino effect. We also always look for what they call guidance, which is the company's own forecast for the future. Are they expecting to do better or worse in the next quarter or the rest of the year? This guidance is crucial because it tells us how management sees the company's prospects. Sometimes companies might beat expectations and other times they might fall short. Thinking about the broader industry, companies in this space are also often focused on innovation and sustainability. Are they developing new greener products? How are they managing their environmental impact? These are factors that investors are increasingly paying attention to, and they can influence a company's long-term success. In terms of analysis, when a company releases its results on an 8K, it means they are disclosing important information. If this press release indicated strong earnings, for example, it would likely be seen as a positive sign, suggesting that Cabot is managing its business effectively and its products are in demand. Conversely, if the results were weaker than expected, investors might start to worry about sales, costs, or competitive pressures. We'd also want to see if they are managing their debt responsibly. High debt can be a risk, especially if the company's earnings decline. Ultimately, this filing serves as a notification point. The story is really in the press release itself. Without those details, we're just talking about the filing mechanism. But for Cabot and for any investor following them, the June quarter results are what truly matter. It's a window into their operational execution and their ability to navigate the market. Now, looking at these results more broadly, Cabot Corporation, like many in the chemical industry, operates in a cyclical market. Their performance can be heavily influenced by global economic conditions, raw material costs, and the demand from key end-use industries such as automotive, construction, and electronics. If we assume their earnings were strong, it would imply that demand for their specialty products remained robust and that they were able to manage their costs effectively. For instance, if their carbon black sales were up, it could mean that tire manufacturers were purchasing more materials, a sign of strength in the automotive sector. Conversely, if their sales were down despite the positive spin a press release might offer, it could signal challenges in those same sectors. For example, a dip in fumed silica sales might indicate a slowdown in electronics or construction. We'd also pay close attention to their profit margins. Are they able to pass on rising costs to customers, or are they absorbing them, which would hurt profitability? The war in Ukraine and global supply chain disruptions have been significant factors for many chemical companies recently, so understanding how Cabot has navigated these issues would be key. A critical area for any investor is the company's debt. We would want to see if their debt to equity ratio is at a healthy level compared to their peers. If they have too much debt, it can make them vulnerable during economic downturns as they still have to make interest payments. On the other hand, using debt wisely can help a company grow. One major opportunity for companies like Cabot is in newer advanced materials and sustainable solutions. As the world moves towards electric vehicles and greener technologies, companies that can innovate and supply these emerging markets often see significant growth potential. We would be looking for any mention of new product development or investments in these areas in their earnings release. Risks would include intense competition from other chemical manufacturers, fluctuations in the price of raw materials like oil and natural gas, and increasing environmental regulations. Geopolitical instability and trade wars can also impact demand and supply chains. In conclusion, this 8K filing is essentially a signpost pointing to Cabot Corporation's most recent financial performance. The real insights lie within the press release it references, based on typical industry dynamics. Strong results would suggest good management and favourable market conditions, while weaker results could signal economic headwinds or competitive pressure. The company's ability to innovate, especially in sustainable materials, and manage its financial leverage will be key to its long-term success. Alright, that's our breakdown of what this Cabot Corporation filing likely represents. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.